All right, let's get going. Welcome, everybody. Let me turn on the camera. Okay, so these markets have been wild. Well, let's say a subdued wild, running in place for the most part, but whipping up and down as they have been. Same thing last few days, and it is an options expiration. But we take a look at the internals today, and I'm going to compare it to whether the last time you were here to see how things set up differently. But let's take a look at our interpretation of price action. And you're welcome to post comments, questions. Everybody's here to learn. So this is our way of looking at the broader markets and what they're telling us. As you can see, market interpretation, we base it on price, the price structure, intermarket relationships. I can't say really not headlines. I mean, the headlines have just been like overwhelming us lately in this market, war, news, bombs, taxes. I call it the Trump effect. And it's just been whipping markets around terribly. It is what it is. And so we've been through it before and it'll pass as it always does. And the internals are telling us we're closer than we think than we might be. However, like most corrections, and this correction has been ongoing since the end of last year. So look, we're into March here, and seasonally, I remember at the end of last month, there's like seasonal tendencies, historical tendencies that say March was supposed to be a good month. Well, so far it hasn't been such a good month, but we got time left, and things could turn around pretty rapidly. So as it says, you have to understand the market environment and what matters. And I came up with this term years ago, techno-fundamentals. And the reason I came up with that was, starting out knowing nothing, um, learning a few price patterns and basic trend analysis and so on, come to think that, hey, I knew something. I did know something. I didn't know what I know today, of course. And so keeping track of the trades and journals, trying to scratch in my head, why does this setup look just like that setup, or so I thought, but act so differently? And it was a light bulb moment at the time. Today it's like, hey, McFly, the thing of the guy pounds on his head and it's like, hey, stupid. It's the market, stupid. you know? So, okay, the market is leading these stocks. How do I measure the market? Market internals, which we're going to look at. And then, of course, intermarket analysis, which is, oil. Today, it's oil and bonds. Many years ago, it was all about bonds and interest rates, and all of these intermarket relationships kind of come in and out of favor. So from there, like we look at stocks and options and ETFs and how they're developing, and we're going to take a look at those. What news is moving the markets? What do they tell us? Well, we know right now everybody's focused on inflation and interest rates. Interest rate decision is coming in a couple of hours. They're not going to do anything. We know that based on the charts and other information, but we use a 13-week trend of the interest rates, and we've been using it for decades. They're not going to do anything today, but they're going to talk about tariffs and oil and inflation, and he's going to probably say, we were doing well. It's improved dramatically, but based on, current market conditions, that doesn't support lowering interest rates, and the markets will probably gyrate. And hopefully that might cause some type of a sharp sell-off, which could set off a low. Now, sharp sell-offs create emotions as to, hey, I don't want to get caught in a crash here. Nobody does. Well, what's the probabilities of a crash? Well, everything we're talking about, techno fundamentals. and we don't have the potential for a crash right now, but it could get kind of ugly looking in the moment. But our internals are telling us we're close. And I captured them just before we came on here so everybody could see virtually in real time where they're at. Now, things could change from now until the end of the day, because I typically only look at those at the end of the day, but we're going to look at them now. So you've seen this before if you've been with us before. This is our concepts, and within these concepts are sub-concepts. And so price is king. Nothing else matters on the level of price, because price is what we trade. And we look at it in the candlestick format, bar by bar analysis. It's the most powerful thing I ever came up with. Other than the simplicity of how to put this all together. But when we look at candlesticks and talk about candlesticks, we don't care about the names. We care about what this bar tells me about the past. Does anybody hear an echo? Kim is saying. I don't think there's any other mics on, so you shouldn't. But nothing I can do. But okay, thank you, Jerry, for responding. So bar by bar analysis, what is that? Well, it's the essence of taking each candle, and we know if it's a big green candle, it was bullish, and a big red candle is bearish, and putting it in the context of the candles that preceded us and the trend analysis in multiple time frames and support and resistance, and then looking at a grouping of these candles. We just had a whole discussion on this as we looked at a stock in the green room, and that had an overhead gap up ahead and a pivot, but it was forming a nice pattern where it looked like it was going to go higher. I don't remember the symbol, but we had a great discussion in the green room, which we have many of them every day, about what we do, our method and technical analysis and support and resistance. It's essentially an educational event every day besides our trading. So multiple time frame analysis. I'm going to find a link a little later on a video that I sent out last night. I'll find that for you and put it in there. A presentation I did last week. And then relative strength and weakness. What is that? Well, it's just this going up and that one's going down. That one going up is weak. Something goes down and one goes down slower than the other. It's showing relative weakness, but we use internals for that as well. Volume and moving averages, we'll look at that. Broader markets, we're going to definitely look at that. The trend and our bias. Oh, thank you. Yeah, put that link in there for that, and I'll just post it. Social media guys, so they can see it as well if they want to watch. So you'll learn a lot from that. Position and money management. This is really the holy grail. It truly is the holy grail to making it, because all of this stuff, you're going to learn it. You're going to know it. Just take time, repetition of training your mind to think along those ways. But along the way, if you just swing in the bat, to try and make a killing on any given day, and you get destroyed your account, you're not going to make it. So on a consistent basis, you need to learn position and money management and when to add positions. Sometimes we average down with the right approach. You might say, you've been never told to average down. Well, no, we can average down depending on multiple time frame analysis and all of this. There are times when we can average, and we also average up. And all of this plays into your trader psychology. Right? It's big. These two things are tied together. So as it says, one concept is not a strategy. You got to learn how to put this all together. We mentioned the techno-fundamentals, and this is a nice little slide that explains it. Trend, support, resistance, looking at the relationships. So I've got the little stool here that I had made, technicals and intermarket relationships and market internals, and all of that holds together to support us as investors and traders to make intelligent decisions. Putting that all together puts the odds in our favor. So as we combine them, and We use some for day trading and some for swing trading, of course. Now, and this is big. You got to get your head to thinking about technical analysis from the view of what that says up there. It's pictures of other people's beliefs and expectations created with money. And when we talk about these price patterns, and when we incorporate breakout failures, failure patterns, shock patterns, for me, I've told this before, you probably heard it before. How did I get on this idea, bar by bar analysis, and it being an picture of what people think? And just to say I came from the same place you did are or are going to be in, kept thinking to myself, how the hell did you sell the low of the move? Right? How did you hold on to that trade for that amount of time when it was going against you? And then how were you so convinced that it would continue to go down that you sold it and it wound up being the low? And by keeping a journal, I discovered they were pictures that were a representation of others' beliefs. And at the time was my belief. And I was like, that's what it looks like when traders capitulate and how it trends and the individual bar that it forms when there's that capitulation, or when traders get caught buying breakouts or selling breakdowns, and how to combine that with support, resistance, and trends. And that really brought on the power of using technical analysis, which does not revolve around Ichikumi clouds and dark cloud covers and all of that, right? And here it is, the ultimate indicator, the Ichikumi cloud. And it says chart artist or a trader. And the people sell courses on this nonsense, how this cloud tells you where support and resistance is, and these colored lines tell you about multiple time frame trends and where to buy and where to sell. It's really ridiculous. It should be outlawed, but buyer beware, buyer beware. Now look at this chart, and there's several things I can point out to you. Now, I don't have pivots. What's a pivot? Well, I'll show you some other charts. It's just a bar with 3 higher lows to the left and right, or 3 lower highs to the left or right. So this would be a pivot high. This would be a pivot low. And where there's a pivot low, I expect buyers to be there again, because that's where the buyers were before. Here's a picture of slowing momentum, right? There would be a pivot here. And then as this began to turn, the distances were closer together. That tells me that momentum is slowing. It doesn't mean it's going to do this or that it's changing the trend. So those concepts, and I said that there were sub concepts within them. So within trend analysis, there's attributes of a trend. There is trends slowing. There are trend attributes that display acceleration, like this. Right? And when prices accelerate from a consolidation, historically, they go lower. They go lower to the next support. Yet, momentum can slow. There can be counter trend moves. If we go and look at some charts right now, like possibly software stocks, a lot of them look just like this: acceleration, lower low, deep retracement, consolidation, moving up. And some of them are doing this, failing just like that. This is a little breakout failure right there. We call it an upside shakeout, where it went sideways. It looked like it's going to go higher. It's transitioning from a downtrend to a sideways trend. And then it went sideways again. Now you might think, hey, I saw this example of an upside shakeout that Greg showed me in this webinar. And this is what it does when it happens. That's a probability of what it's going to do when it happens. And this is where the bar by bar analysis comes in. Because once you see this pattern, it's confirmed on the bullish, on the bearish wide range bar, and then the 1, 2, 3, and it continues lower. Right? This wasn't confirmed until that happened, because it could have flipped the other way. So again, bar by bar analysis. So we could go on with this chart. There's lots of different things we could look at with failures and pivots and shakeouts and slowing momentum and acceleration and so on. What this is on the bottom, I have no idea. It just looked pretty good to make my case for this subjective analysis. All right, let's talk about candles. Let's simplify that. Let's really break it down to simplicity. There's these big candles and there's little candles. Some candles have tails, some don't. So what's the takeaway from this? Well, if we have big green candles and there's no tails on it, in this example, it opened at the low and it closed at the high. There was confidence within that range all the way up to the top. And this one, there was confidence to sell it to the bottom, all the way down to the bottom. So let's put this in some context. I come back to this chart and put it in context. Look at the bearish wide range bar in the context of what preceded it, an upside shakeout. Now I have something powerful. That's a thought that tells me to think short. This tells me to think that's a bearish bar. But I have to put it in the context of what preceded it. So if we were to take this bar and it happened over here, it gives me a powerful message. And if this is in a downtrend, where this went sideways in a downtrend, and this is what Ichikumi is trying to come to some conclusions about. This cloud, and I can't explain it to you. I don't know how it's constructed, but I know what it's supposed to mean, is that this was going down, so it's supposed to keep going down. Well, you know what? If there was a big green bar here into the cloud, then what do you think? Leads you back to bar by bar analysis. So if this is just trending down with moving averages, and there's a big red bar to the downside, think it's going lower. If it's in a downtrend and it's going sideways, and we take this topping tail bar, which is big, that's a big topping tail bar. That's a little topping tail bar. And you see this, it got rejected. When it went up, sellers took control. Sellers took control. We dragged that over here. Now, I keep mentioning in the downtrend, because if it was in an uptrend and I saw sellers took control, say, okay, I see that, but I give the benefit of the doubt to the uptrend. Whereas if it was an uptrend and I saw buyers took control, right, this broke down under the lows and came right back up again. I say, hey, there's strong demand. Institutions, any people are lurking down below. And the mechanics of that is, right, let's just say that, okay, down below here, you've got traders that are bidding because it's in an uptrend. They say, if it breaks down, I'll buy it. And if it goes lower, I'll buy it. And down here, they're bidding. Well, the more it goes down there, right, there's probably going to be less bids. But once it starts to make the turn over here, it starts to make the turn, all of a sudden, those bidders that don't get filled, they're going to start taking the offer. That's how it's strong demand. And they drive it all the way back up into the top of the range. Now I've got some powerful stuff. So you can see the location and the trend is key to what's happening there. And of course, if we could take this is the bar by bar analysis tells you everything that's happening on an ongoing basis. If we took this bar, think about this, and I dragged it over here, and the opening price was down below the bottom of this range, but it closed at the top of the range, it unequivocally tells you that demand came in and drove it all the way back up again. And those buyers are likely to keep coming and drive it higher. So whether buyers took control with a bottoming tail bar or it gapped down and came back up, the message is the same. The pictures look a little different, but the message is the same. Right? It's going to go up. There's strong demand. Right? So you can scan this. You can go to the website, Why Master Trader. You can go read about it. There's a nice little stuff written there. You can check it out. But no secret to success. It's hard work. You got to learn a method and interpret. You got to internalize it and use it and experience. Same thing with anything else that you learn. Education, experience, confidence, wash, repeat, discipline to do it on an ongoing basis in a changing market environment. So you need a trading plan. Without the plan, you'll fail. Right? I says almost. I'll go further than that. You will fail. Without a trading plan, you will fail. Even if you make money on any given day, you'll give it back on another day because you're random. You need a plan. That's the key. And how do you make a proper plan? Well, you start again with the education. Little time following up. You got trading journal. I've often talked about using Microsoft OneNote. There's some really elaborate platforms out there that you can import your trades, but it really comes down to make a journal that capture a chart, and this is what you can do with this Microsoft OneNote. You capture a chart. It's got a Snagit kind of platform in there. You capture the chart. You put it in your folder in the Microsoft OneNote. You type out what happened, what went right, what went wrong, and the swing letter. I give you an example of exactly how to do that, and not the letter, the course. And you learn from that. You learn from what works and what doesn't work, and you do it on an ongoing basis. And this patience and discipline part to follow your method, unfortunately, the way you're going to learn to do that is by breaking your plan. And every time you break the plan and you keep a journal and you say, damn it, I did that again. I'm not going to do it anymore. You'll do it tomorrow. Eventually, you'll get tired of screwing up. You'll lose enough money and you'll follow the plan. Right? And you'll learn patience and discipline. And then you'll eventually get there. All right, this is something new Dan and I came up with. You can scan it. I can get the code, but anyway, you can scan that, or we can get the code later. We post stuff in there pretty much on a daily basis, videos, watch lists that we're interested in different trades, some things that are going on, recordings. Like I posted the recording of the link that went in there today of that presentation. So yeah, you don't even have to give us your email. You can go in there and there's information in there that you can view, you can learn. So it's a good way to get to know us. No cost to this. So here, this is right, going to be interesting. This is what I showed you 2 weeks ago. This is not today. This was 2 weeks ago. And you're going to see the change. So this is part of the Master Trader ETF letter. And what this shows you on a daily time frame, this is what happened the week before, and this is the current week. I update this and it goes out to the ETF letter every weekend. And so they can see the change. Does the trend change on the daily time frame? Does it change on the weekly time frame? So that would be the current week and the previous week and then monthly. And then if there's a change, well, this depicts the trend. If it's all green, it's higher on all time frames. Transports were up on all time frames. The NASDAQ was getting questionable. It changed to a downtrend. This is 2 weeks ago when we did MT Live. This is what I was showing you and explaining to you. Software was beginning to transition from a downtrend to a sideways trend. And financials were in a downtrend, sideways on the weekly. So ideally, what we're looking for here is alignment between all of these time frames to all be up, all be down. Now, historically, something like this, where it transitioned from an uptrend to a sideways trend, certain times, depends on the market environment, and you'll come back in the next letter and you'll see one of two things. It'll either still be sideways, two sideways, and this will be up and up, This will be sideways over here, and this might be down, right? Because the transition from up to down historically comes with a move to sideways first, and then it goes down. Right? Sometimes there's whipsaws sideways and it goes back up. But anyway, we can't control the market. We can just observe what's happening. So this tells us what's happening across all of these markets on an ongoing basis as it changes. Music internet here was in a downtrend on the weekly and daily, and it shifted to sideways on this. This was 2 weeks ago. Bonds were in a downtrend. Bond yields, regional banks had shifted to a downtrend. So as this shifts, as there a change that week, I color code the symbol. There was a change. Like gold miners shifted to up 2 weeks ago in all time frames. Solar went to sideways, and so on. And so we continually watch these. Consumer discretionary went into a downtrend on a daily for 2 weeks in a row, and financials were 2 weeks in a row. So you look at this and you're like, you can see at a glance what's happening. Now, we look at our market internal gauges, breadth and sentiment. These are moving averages of put call ratios, equity and total put call ratio. This is the total down here, and this is the equity. So 2 weeks ago, this entered these bottom bands that adjust for market environments. But breadth was just beginning to deteriorate. It wasn't at an extreme. Here was the rounding top, but every time it went down, it came back up again. This was like pain for months, uncertainty. When is it ever going to end? Is it just going to be sideways and then up, up, up and away to new highs, or is it going to go down? Right? Buyers stepped up. Buyers took control. Range expansion bottoming tail bar from 6,700. Internals are still not aligned. This was the cues 2 weeks ago. Sideways, wide range bar up. Declining 20 and 50. What is going on with this crazy market? Rounding top on the weekly. Where are we going? I don't know. We're in the middle of the trading range. Looks like it's going to continue to gravitate around here. This is holding major support. These pivot lows. Buyers keep stepping in on the dip. Pushes back up. Can it clear the highs? This is why we call Master Trader Technical Strategies, all in the course, thought building lessons. Sometimes your thoughts are like going all over the place, but that you're supposed to, because the market in this instant are all over the place, versus if everything is in a solid uptrend or a downtrend, it's clear to everybody. You just got people that are saying, hey, it's overbought. Yeah, watch this. Watch it keep going higher. So what's happening right now? Look at how things have changed in 2 weeks. Look at all the yellow. This was in the ETF letter. Well, there was one week before this weekend, but of course they were showing the transition from 2 weeks ago. But you can see this is what happened from 2 weeks ago, and this was this weekend when this, Sunday when it went out, and this was the prior week. So from what had happened here, sideways, all that was happening over there was a shift over 2 weeks, and it's like, hey, if you're not being careful, you're going to get run over. And so the S&Ps rolled over. This is as of today, right? And I captured this just before 12 o'clock when we came on. Breadth pushed down to an extreme. Okay, great. This one yesterday pushed down and came a little further today into an extreme. This is of intraday today. This could flip up by the end of the day. I don't know where the markets are doing absolutely nothing, waiting for the Fed guy. This pushed down into the lower bands. These internals are telling us, get ready for a turning point. I look at this chart and I'm like, this is garbage. I'm not interested in trading this, but you know what? If this will dive down here, maybe it'll hold 6,600. We're going to see what happens this afternoon. Okay. I can see the cues are showing relative strength to SPY, the S&P 500. So ideally, if this dips down, I believe Well, see these green dots? Those are pivots, 3 higher lows to the left and right. Buyers are going to show up again. What are they going to buy? What's showing relative strength? Semiconductors, software stocks that are already beaten down. Granted, the charts are not ideal. Most corrections are ones in which it's going down, down, down for a few months, and then it capitulates. And we've got all of these overlapping bars and messes. And so there's nothing to do right now in these time frames, but these internals have gotten to the point where I know historically, and I've used them for decades. So there may be a scary moment coming, but get ready for the stabilization, because when these things get cooked like that, just apply bar by bar analysis. Whether it's here at the 200, or whether it's here at 6,500, I hope it's here at 6,500, coming down to these lows and these tanks. And then think about bar by bar analysis. What if it breaks these lows? There's going to be chaos, because all of these buyers, their stops are going to get hit. They're going to capitulate. It'll be an emotional moment. And if it's a range expansion bar that dips down there, and then we get a bullish 180, or it turns into a bottoming tail bar, I hope Dan's out of the hospital by then. Dan's in the hospital, guys. Give him some well wishes. He's going to have his gallbladder removed. He'll be a little slimmer and lighter when he comes out after Friday, after tomorrow. But but yes, we wish you well, Dan. You'll get through it, and you don't need that gallbladder. But anyway, guys, ladies, this is what we do every week in the ETF letter. We go through different sectors for the advisory letter, but we look at this. Energy's doing well, and telecom's doing well. Gold was breaking down this morning, so this is probably in the sideways trend. But look what gold miners did. It was all green 2 weeks ago. Now it's in a downtrend. Right? So regional banks are downtrend. Artificial intelligence on a daily is in a downtrend. Semiconductors last week transitioned to a sideways trend. In other words, it's a giant mess out there. This shifts your mind, your thinking to where it needs to be. Things are great, things are terrible, things are mediocre. Right? Go check out the letters, the advisory letter, the swing trading letter. They're all amazing. They're all educational, ongoing education, trades, charts, everything's updated. Every open and closed trade, it's all there. Chart of the week, check it out. You can scan this, check that out. Trading education, I think I just showed you this before, check it out. So now let's look at some charts. What's going on in different sectors? I want to get rid of this. Hold on a second. What was that? There we go. All right. So this is a platform that we use for scanning. And I use it during the trading day. If we look at finding opportunities with scans or what's happening. And so here's your S&P 500 sector charts. And rather than the matrix there, what this looks at is, okay, how are things doing percentage-wise in different, weekly, daily, quarterly, and so on. This is something I created. You're welcome to it if you're a subscriber. And what's doing well and what's doing poorly. All red dots, it's below the moving averages. It's below the 200. The 20 is not pointing up. And so you look at the chart, and I just look at this and I'm like, this is not good. Right? This can't be doing well. And it's consumer discretionary. Not doing well. It's in a downtrend. Where's support? I look to the left. It's right on a pivot on the weekly time frame. So in that matrix, you know what? ETF, in the ETF letter, what we're going to be looking for in that matrix, I'll be looking for and updating this, for this to shift from a downtrend to a sideways trend. With this near major support in the internals cooked, This shifts to a sideways trend. How would it do that? Some type of a retracement. Going to have to form a pattern. It's not there now. And that would transition for this going up. Now, from there, that's just for the ETF letter. This is just one example of how we would find opportunities. But I've got a whole lot of ETFs to look at. Alfonso, this is called TC2000. We don't have any relationship with it. They don't pay us for using it. I've used it for decades. I just create these layouts and these scans. So there's scans within this sector. I have layouts with just different scans. So these scans look for whatever I put in here. So you can see this is the stocks within the discretionary, consumer discretionary. So if I want to now go from there and I say, okay, show me something that's touching the 20 MA. We touched it the last few days, right? I could sort it like that, and it throws that up there. I'm not sure why it's not. The 20 MA was right up there. Sometimes it's a little off, like that one there, right? That just touched the 20 MA, but it's not a pattern I'm interested in. As I look at these patterns, this is too loose and erratic, but it's showing relative strength to the broader markets. Why? I don't know. It's going to report earnings in May. It would need to tighten up for me to get interested. And then I look at it in multiple time frames, and it's pretty messy as well. But what if I want to say, you know what? Show me if there are any bullish wide range bars. And lo and behold, there is one. So what do I do with that? I'm not buying it. It could be a credit spread, right? This is the kind of pattern we look at for credit spreads. I see at this premium. Earnings going to report tonight. Oh, it probably just reported their earnings. That's why it's up. So there's probably no juice, but I would pull this over here and I would say, okay, is there premium at $180? Now, look at the spread, right? 2 days to expiration. The spread is huge. Nobody's going to do anything with that. It's sorted by volume. So if I sort it by symbol and now go and look at $180, of course, it's going to be the same thing. But what if I wanted to go out? Now it's only got monthlies. Somebody might say, you know what? I'm okay with monthlies. You got to, wait. And they go, hey, I don't think that'll go down to $180 in a month. Well, that's the bid and ask spread. You could do a credit spread, but a month is far away. Now we're really looking for things, 10 days or less, ideally. But you see what we're after here. What's showing strength? What isn't? And is something showing? Does it have all green check marks? And let's have all green check marks. Of course, energy, oil's going through the roof, but it's 12% above the 50 MA, and it's over 4% from the 20. Now, if this spikes higher, if this shoots higher, and it's extended, whatever's happening in the news, odds are it's going to start retracing. No evidence of that yet, but this gives me some insight historically. Is it extended or not? The only one with all green check marks. This one here, last week, right, I was still above the 50. This week, this one here, communications, it was above the 20 last week, and now it's below it. There's so many of these messy charts, but it's down on major support. It's going sideways. What does that tell me? Do nothing. Do absolutely nothing. So this gives, again, insight as to how the different S&P sectors are improving or weakening. Right? Some of these here are still above the 200 MA. This one here, 20 is still above the 50, but it's pointing down. That's why this is red. Right? The 20 is pointing down. Right? That one's just holding there. There's lots of charts right now that are just not attractive. When I say not attractive, that means that they're not giving us opportunities. But I could look within the sector and find maybe something doing well or not. This one's got a little dot there. Well, that means it's gapped. There are no wide range bars. There's no bullish wide range bars. But if I look at the S&P 500, and if we go SPY, we go for a broader index, and there's some bullish wide range bars. Credit spread, the first thing that jumps out at me, it's a healthcare plan. The 65-minute is basing. This is something I would consider as a day trade. It possibly go higher. It's extended. Another wide range bar showing relative strength. It's messy, so we have to interpret these patterns. Right? So there's wide range bars. What if I want to find topping tail bars? I just click that. Here's a short. Earnings are not now. Here's a rejection. Remember we looked at upside shakeout? Another day sideways, takes out that low. It's got a void to drop. Look at the weekly time frame. Yeah, it's extended. It's been going down for a while. It's software. This is what we're seeing lately. We had this strong move. Remember IGV? Look, IGV. Strong move up. This is the ETF for software. Pullback. Looked like, oh, it's going to go up and test the declining 250. The green line is the 50. And now it gets rejected. But it's holding here today. Everybody's waiting. Right? What's the Fed going to do? What's happening with oil? Is there going to be another bomb? Did they ever change the account limit on day trading? That's a good question, Kim. There was talk about changing the pattern day trader rule to where you got the increased leverage. I don't know. You could Google that. That's a good question. I forgot all about that. Thanks for bringing that up. I don't know. I don't know. And there's this. Let me, on a side note, folks. I'll give you a warning. There has been a proliferation of these so-called prop trading firms where you go pay for the privilege of trading a paper trading account. What a BS story. They are all over the place, like cockroaches. Come over here and pay us $100, $200, $300 a month to be a paper trader. And the promise is you're going to get a paid account. These are paper trading prop firms. Most of them focus on futures because you don't have to pass the test to be a day trader where they get the leverage. So they focus on futures. And they teach you how to use these little tiny micro time frames because the ranges now are so big, that even on a 1 minute chart, especially on a 5 minute chart, one contract could be, if you were trading the mini NQs, when things are volatile, you could, one 5 minute bar could have a $100 or $200 risk on it. So, yeah, be careful with these so-called prop firms. It's a big Ponzi scheme out there, kind of. Be careful. So anyway, look, we can look at different sectors and look for different opportunities for scans. You got to, know what you're looking for, right? So there's a like a 180 there, but it's not really turned around. That one there, another software one. That one there, I'm setting an alert under that pivot low because if it breaks that, that's going to go down. So it was trying to transition, right? It's trying to transition, and now a deep retracement back down to the lows. There was a rejection yesterday. Today, it's trading above, the opening price. So if it was to close green and breaks below here, which it's not even 1 o'clock, but breaking below here, if it is a green bar, sellers are going to come in and knock it down. Brownies, prepare. Break out with join green room. Alex, some of these comments are not coming in here. I'm sorry, Brownie. I didn't see comments where I was looking. Um, okay, whenever you're ready, Brownie, you know, don't judge you. We don't judge. But you know what? You come into the green room and we have conversations every day. Traders ask questions. Sometimes, we get them to take the microphone and talk, which is great. So there's a lot of sharing there, a lot of education. It's fantastic. All right, let's look at a few other sectors. All right, so you can see I just clicked regional banks, which are down a lot. And it fills in all the regional banks here. Can you replicate it with my support? Are you a member, Alfonso? Do you subscribe to a newsletter? Have you taken a course at Master Trader? Well, when you do, I'm happy to share it with you for nothing. I don't know why. Why aren't you taking a course? You're here, you want to learn. You want to learn. You might say, you know what, Greg? I want Dan's gonna laugh. How many times we heard this, right? It's like, as soon as I make the money in the market, I'm gonna buy your course. Ha ha ha. Maybe you'll get lucky, punk. I'm not saying, like, don't take that in a derogatory way. I'm talking to you, but Dan and I have heard this over the years. And yeah, right. I'm gonna learn to cut you open after I make money as a surgeon. Look, after you get the education, you come to coaching, you watch coaching replays, you internalize it, you practice, and look, these layouts, I could say someone else would sell them for hundreds, if not more, with these scans and so on. The beauty is knowing how to use them. And so if you become a student, you subscribe to a newsletter, you subscribe to MT Market Edge, Weekly Edge, which Dan does a review of a trade. I put lessons in there. You get the recordings of these MT lives. We'll give it to you for free, these layouts. Right? There's lots of them down here. There are different ones. Look, well, that one is on internals. This one here, I mean, these are just maybe not something like that, but there are ones with different scans. I can't even click on this because that's just a sloppy one that I made. Right, here's one that is grouped with a specific number of stocks that I want to focus on, um, with certain volume characteristics. So this one is looking for ones that are, you can click on these, there's nothing proprietary. So this one is looking for certain criteria and certain prices, but the scans are within here. So if I want to go find something within this scan that there's a bullish wide range bar, I go click that and it's going to load it up for me. Put this on a daily time frame. And so now you got to know what you're looking for or looking at. So it's not like this is going to make you money. Right? This will put you in the ballpark, but you got to know what to look for and then how to trade it and the money management. That's what the courses are about. You want to find something here. Look at this one. Show me something that was below its 200-day moving average and now it's above it. Nothing. Show me one that was below the 50-day moving average and now it's above it. Here we go. I bought weekly advantage, bar by bar. All the education is perfect. Appreciate that, Brown. Well, I think it's perfect because we created it. But look, we put our hearts into creating these things. And it's a lot of work. I mean, that bar by bar analysis course, that's hours and hours of work and sharing education. So, like, here's just one. It regained the 50 MA. What do I do with this? Credit spread, probably no premium. It's in the teens. It's at some resistance here. It might develop if it goes sideways, but it's beginning to make a turn. I can see what sector it's in. It's in the leisure sector. So again, this is how you can find things. Right, that one regained the 50, but you know what? Pan W up at resistance, deep retracement. The weekly, made a nice big turn. It's going sideways there. I'm going to set an alert below this red topping tail bar. But I want to know if it can really go down there because of the strength of this move up. It got bought aggressively, but it's going sideways for a while. If it breaks those lows, it definitely would be a call spread candidate. And it may just be a short as well if it was to break down under this low. So in the scans, find me things that I'm telling you to go find me. This is what theirs are doing. Show me a range expansion bullish 180 within this price criteria. So this is the criteria. I have others that show me other criteria. Right? There's 400 stocks in here. So out of that criteria, show me what I'm looking for. If I say, show me something with a big volume spike, out, big volume spike, all right. This thing's all over the place. And look at the volume spike, and it gapped up today, but it's too wild. Here's another one, big volume spike. Credit spreads, right? But it's a utility that probably don't have premium, right? So think about what you want to find. All right, volume spike, big nasty drop. This is what I'm talking about with these software stocks that were bottoming out. Some look better than others, and now this looks like reported earnings, so it got crushed. But W day, it's questionable. It's down a lot, but if these markets are going to take a nosedive, these things turn. And I talked about these are pictures of traders' expectations and their beliefs. So, what was happening here? What did they believe? Well, came down hard. Look at the volume spike here. This was on earnings, and it turns around like IGV moved up. Now it pulls back into an area where there are overlapping bars. There's going to be buyers there. Buyers stepped up. Now, topping tail bar, sellers took control. All right, well, that didn't mean it was going to do this. It could have been up today, but markets gapped lower. This morning, markets were higher before the open, and then they collapsed, and then the news came out, and then they went lower, and now they're just sitting there doing nothing, waiting for the Fed. I'm looking up to my other charts over there. And so that's doing absolutely nothing. But if the markets are going to head lower, this is something that might just fall apart. We got a few minutes here. Take a look at the broader markets. I'm just going to drag another screen over here, the one that we look at in the green room. You'll be able to see this. So there are ETFs that we could look at here, and same kind of story with stocks within different sectors. But we trade these leveraged ETFs in the futures almost on a daily basis in the green room. And so as we will go through these, just make sure that what you're looking at there. Okay, I can see you looking at that. We look at 5-minute charts, and is it an uptrend, a downtrend, a sideways trend? Is it like doing nothing? These are the moving averages, 20, 60, 200 relate to the daily. The 5-minute, the 15-minute, and the hourly. And then is it above or below the opening price, yesterday's close? And then there's these trader pivot lines that are on there. So we put together multiple time frames. We're looking at these 5-minute charts and looking for opportunities intraday where there's prices coming to an inflection point where multiple time frames are in alignment, and we get a pattern. So right now, we see pivot highs and pivot lows that are opposing each other on a 5-minute chart. It's trying to hold this area here. And it gapped down this morning, and it was kind of like, okay, is it going to go up and fill the gap up here? What is it going to do? It was all this chop back and forth for a while. Then it drops and it looks like it's going to come down. It comes right back up again. The market is right now is in crazy mode. What's going on? It's not you. What is you is if you're pressing the button like an idiot, getting churned up. So the 65-minute charts is our higher intraday time frame. And it's just marking time here. Gap above, a little void above, a little void below. It's just quite no man's land. So as we look at this and we put this all together, it guides us into what's going on in this market, which adjusts our bias from what we think or hope to what is. And this is what saves us from being that idiot pressing the button where things are going nowhere. And so from there, we covered the broader markets and what's going on here and all of this slop in the internals. But we start looking at individual stocks and sectors like this, looking for opportunities. We're in search of what could pay us. It's going through different things. And so there's biotechs here. I could go look at financials, XLF, which would load up those stocks in here. And we can start looking for those. And so asset management, which has been beaten down, starting to bottom, right? It's showing some relative strength. Money rotates from winners into losers. And the more losers there are, remember the breadth internal that I showed you? That tells us when the losers have reached a point of being historically, there's just so many losers out there that historically the market has made a low. Now, the sentiment gauges are reaching or have reached a point where we know that there's so many losers out there that option traders are hedging, scared to death that it's going to go down, crash, or buying puts historically at a level that has reached points where markets have made a turning point. However, right, there's always that however until it is what we got. However, we do not have a pattern yet. Remember, price is king. We do not have a pattern yet that says, get in there, risk on. It's coming. It's coming. So, since it's coming, I suggest if you're with us, you should be with us, come into the green room, and we're going to be doing this intraday on a continuous level. Join the advisory letter because we're going to text you in the middle of the trading day or the weekly options trader or the ETF letter. We're going to text you in the middle of the trading day live. What's happening? It's getting close. This is what we're going to buy. This is what we're selling. And, from there, the goal is mastery. And it comes with education. The market's selling off here a little bit ahead of the news. So with that being said, I'm going to end it here. Get ready for the Fed. If you have questions, email us. Greg at Master Trader, Dan at Master Trader. Don't email Dan tomorrow. He will be under the scalpel, and we'll be wishing him well and a safe return. All right. Thank you for the hearts in the presentation. All right. Talk soon. Bye-bye. More hearts, more hearts.